Hey, good morning, David. Larry R.P. Zimmerman. I don't recognize your name, but morning. Maurizio Valerie P.D. Wrongimer. Glad to have you. Lucero, Donald, Allen, Arturo, Aaron. Glad to have you. Wrongimer. You see Tesla down there at 228. Getting close. Getting close. Anyway, glad to have everybody. Welcome. And let's talk about the markets. What's happening? What's crapping? What's moving? What's not moving? Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, and fun. Hope you have fun. Not a recommendation to buy anything, financial instrument or otherwise. Don't buy stuff from gurus unless you trust them and you want to go further with them. If you desire personal financial advice, you need to hire and consult a financial advisor because they have a fiduciary duty to take care to give you advice based on your financial situation when you hire them. So if you buy any more, so many freaking robo advisors, it's dangerous, 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 dangerous. All right, we got the economic calendar coming up for today. We have the FOMC minutes coming out at 2 p.m. right here. It's not highlighting blue, but right there, right in the middle of the screen, FOMC minutes, and we kind of know. Like it was a non-event on the last FOMC meeting. Are the minutes going to change? Are the minutes going to create a reaction? I don't know. But coming out at 2 p.m., if you're not prepared for some kind of volatility, watch out, baby. So, Space Cowboy, welcome. Hadn't seen you before. Ben West, Craig, Laura, PD, glad to have you. All right. Get a short ad. We can delete so we don't hear you. Well, I mean, you can always pull it back and rewind, whatever. I know you don't hear me. There's ads. That's part of YouTube. Sorry. I can try to turn them off, but YouTube likes to show ads regardless. So always ads. Just letting you know. Anyway, it's how YouTube operates. All right. So FOMC minutes and nothing really else today. Nothing else. I mean, we've got some unemployment tomorrow. Philly Fed. Not really anything cooking. Next week, we do have Jackson Hole getting going. If you're unfamiliar, that's where the FOMC, the group of cronies gets together and they start discussing laying out their yearly plan and where they think the economy is and all that garbage. So we'll see what actually transcends from that next week. Well, it'll probably be the following week before we actually find out because they meet into the weekend and the Jackson Hole Symposium. But, next week kind of benign too, in all respects for us. I mean, we get flash services PMI. I mean, flash manufacturing PMI, not really a big market mover in my experience. Unemployment, just it hadn't been a big mover, even though it's a red on here. And core durable goods, these are all like, I don't know that it's almost like we're just immune to it right now. They matter when they matter and they don't when they don't. So the market's not really reacting to much economic news. It's kind of driving by price action, which is a lot of what we've been seeing. Now, a couple weeks ago, a couple Sundays back, I proposed this to my market roadmap group. And so far, we are right on path to bottom in this orange box. Potentially get a 100-point rally. And then the proof is in the pudding. If we turn down, we're probably coming down here. That's probably going to last through September, maybe into October on that next drawdown. Be careful, all right? If you're long, you're going long, you're thinking like, this is it. Now's the time to get long for the new high in the S&P 500. Please be careful. We may extend this correction a little bit longer. Could be a lot of bit longer. Now, alternately, we have the S&P 500 seasonality here. We're in August. August tends to be kind of flat. Then we tend to pop toward the end of the week or end of the month. We're middle month, so you kind of draw a line right down the middle of this. We could get a little chop, and then we could see a pop right in the last couple of days. Then a chop into September, and a pop and a drop back, and be right where we are in October. So is this the pop that might be on the chart? Is this the pop that might be on the chart? does it just not do this at all and do something else? This is 20 years averaged move. Take the year, what the year does in the S&P 500, average it for the last 20 years, and this is what you get on a monthly basis. So we tend to go up, and we tend to go up about 8% a year. I mean, that's classic. We all hear that, right? But it comes in spurts. And the next spurt really doesn't kick off till usually October. We could be in for some chop through August and September and into the first half of October. So if you're not ready for that, you should plan for these things. All right. This is just happens to be kind of how it works. I mean, like when you average the last 20 years, the behavior, we kind of, it doesn't exactly follow this, but we generally follow along with what happens historically every year. It's the same things. We get the same economic news cycle. We get the same earnings cycles. We get the same spending behaviors. We get the same holidays. All this plays into here, and it affects our group herd mentality, and we tend to do the same crap over and over. We're creatures of habit. That's just the way it is. Now, as far as actual tradability, there are opportunities that pop up, and that's the way it works. I mean, you have to be, this is definitely a picker's market. This is not just a blanket buy the market situation right now. Now, look at the S&P 500 here. We were pushing the bottom of the trend line yesterday. We've been there once, twice, 3 times before, and we may reverse here. If we break down below the trend line, we could get some accelerated flush out. That'd probably be good for VIX popping, SVX dropping, and SVXY, and lots of other things. Like we need a little flush out in the market so we can go higher. S5FI coming down into the lower half of the chart. Beautiful. We may get down here into the 30s even. Flush on out. We can find a bottom in this area down here around 30. And then rally. We've done that before. Did it before. We can do it again. We can even bottom in this area and rally again. All right. So that's just stocks, S&P 500 stocks above their 50-day moving average right there. If you didn't know that existed, S5FI right there on that platform. It exists in a few other platforms, not necessarily everywhere. I know it's right here in TradingView, and it exists in barchart.com, I believe it is. So there you go, 45.92%. And we don't typically go, if we go below 20, that's usually the point at which we're going to reverse. When we were above 80, I warned and warned and warned that we were about to get a correction, and correction is what we did. Now, looking at the futures, what's actually moving overnight? Let's pop this up and take a look. Getting a little chop, pushing the lows. Lower low. Classic move. We held, we're holding the downtrend line here. So far. Holding the downtrend. If you're unfamiliar with what futures are, this is the S&P 500 futures. And you hear about mainstream media talking about, oh, the S&P is going to open lower this morning, blah, blah, blah. That's because of the futures. Like, they're getting those numbers out of the futures. All right. You can watch them and see what the overnight price action is. Why do I use futures? Because the S&P 500 chart stops moving when the market closes at 4 p.m. Eastern. Futures tell me what happens overnight. Gives me some expectation for the day. We're pushing the lows. We might get a little reversal here. This is getting kind of extended and kind of, we get these extended consolidation pushes lower, and then we get a pop. We might be due for another one of these pops, especially when we look at the pattern the last couple of weeks. Looks like another pop. Now, if we start making new highs, breaking prior highs, then we could go on up, get that 100-point retrace I was talking about on the index. But showing a little weakness so far today. NQ still holding a higher low, did not get a lower low like the S&P 500 did, and this could be an indication that we're nearing a reversal point. Now, if this starts flushing out, then we're probably going to extend on down 14,900. That'd be the level. You might be like, JT, what the heck is NQ? That's QQQ. All the NASDAQ derivatives. Russell showing further weakness, probably gunning for that daily roadmap line right over here. Probably going to go right on down. Daily chart expectation, probably going to drift on down and hunt for some support right down here around that level. Now, you may be like, Russell, that's IWM is the index, and that would be like 184-ish area right there on Russell. That is kind of weak, and probably going to get a deeper retrace. Now, I mentioned for a few days that this was, back in July, this was not conducive of a breakout. And we got a fake breakout and a crush on the Russell. That holding right below the trend line, that trend line came from the prior highs in August a year ago, in March or February this year, and then we came up and stopped right there, lower high this year in August, and broke down. Now, if we find support right here, that can be positive for going higher. If we break down below it, we're going deeper and may go retest this consolidation we had back here in March and April into May of this year. Small caps tend to lead the market. So small caps are breaking down. We're unlikely to take the whole broad market higher and higher. At least not in a big long-term trend way. So oil, let's zoom this up and take a look. And I should pop the thing down so I can see the chat. Alrighty. Oil, still on the path. Probably going to retrace back to the daily roadmap line, find support, and then break on out. Now, there is the potential that we hold these lows from right here, just above the roadmap line, or possibly the roadmap, we churn a little bit until the roadmap line and these two things kind of come together. There is the potential, zoom this back out just a hair so I can move my line. There's the potential this rally pushes up like that, and at some point right over in here, those two things meet up. I mean, we're only looking at another 10 or so days, 10 or 12 days for that to potentially be right up in there. If we do that, then we could bounce, break out above these highs, and then shoot for the target up here around 94. Higher prices in oil, and the mainstream media talking heads all say, oh, moves in oil tend to precede moves in gasoline by 2 weeks. Well, you look at the gasoline chart, and it's doing something a little different. We're getting a little gap down here, probably on a contract rollover, but gasoline not looking like that. Did pop down to the roadmap line here, and this thing turning up here can go full blast off mode. Full blast off mode. We're talking 350, possibly much higher levels, but $3, $3.20 up to 350 area in the short term. Get a correction, and then we could go much higher on gasoline. There's the potential for this thing to be reversing out of this correction that we started back here in June of 22, over a year ago. Could be setting us on a path for possibly $5, $4.90 to $5.70, and that's before adding the taxes, all the federal taxes and state taxes and all that junk. We're talking about $6, $7 a gallon on gasoline potentially if this thing goes full blast off mode. Maybe like, JT, but there's like a global recession and all this junk. Well, I'm telling you, it's in the price chart. All right. Now, Bitcoin, the market's about to open any second there. And Bitcoin just keeps consolidating, not really doing anything, gotten uninteresting. Everybody quit talking about it. Once people start kind of forgetting about it, that's when it's going to take off again. All righty. Ethereum looking more bearish, probably going to flush out. Target area down here, $1,450 to $1,600. Dollar, I say, continuing just to find resistance. We kind of spent, looks like 6, 7, 8, 9, like 10, 12 days right there last time. Couldn't really get any continuation above the roadmap line. If we do that again, expect another roll down, and we may do the same thing again. That was a 3-wave type move. We've basically retraced it all. Now, the indication something different might be playing out is a move up through, say, 103.60, up through that line. If we start getting above that line, daily close up there, then we'll test this area right here, and we get a daily close above that. Something different might be cooking on the dollar. That's dollar index. All right, getting alerts like crazy here. Stuff making 52-week lows and highs and all sorts of stuff. Target, got a nice pop. Still not very bullish. I think it's headed down to this area. Beat on earnings, missed on revenue, beat on the top, missed on the bottom. Depending on what they said in their guidance, they may flush on down. That was a big drop yesterday. You know, lower low, pop kind of makes sense here, but when we do the fib line on that move, it's holding a measured bounce for going lower. That move lower puts us right in the target. Watch out on target. That one can flush out. Now, when we get down here in this 115, 120 area, we can find a bottom. Like, it can find a bottom and turn out of here. But it could also extend much lower. So be careful on target. Yeah, I mean, they're constantly redesigning a store layout. Have you ever been in a Target? I mean, like, no two Targets are like the same. Walmart's, you go in and Walmart supercenters are like, it's kind of the same everywhere. You know, maybe it's flip-flopped or, you know, something, but Targets, every Target I go into is like freaking drastically different than every other Target. I think they're always playing with their store layouts, and I don't know that it necessarily helps them at all. Anyway. Yeah, you get lost in a Target. Yeah, that's true. So TJ Max coming up to the 1618. That may be the resistance. We could potentially break on up to 95 without getting another one of these pullbacks. I just see it as unlikely. You know, 1618 may be all we're good for right now. 89 area. Just be careful on that one. We may consolidate for a little while before we can build energy to go higher again. TJX also are reporting earnings and beating on the top and the bottom. So doing pretty good. ASML also getting a little bit of pop just because it's so big in price. But the percent-wise, not really. It's just consolidating right here at the roadmap line. We got to break back above, get back above 690 to go up again. That one just not super interesting. Maybe I should quit putting it on the list. Big dollar mover, but not really a big percent mover. PGR, nice move up. If we can get above 139, that would be setting this one up for, well, move the whole fib instead of just the dot. Yeah. Above that 139, probably sets this one up for 160, possibly 175, 174, 174, 175. So maybe turning around here on progressive. It's looking positive after that flush out. That looked like a nice 3-wave proportion. Run that. Oh, a little bit shy, but yeah, breaking above those highs. Where does the 139 come from? Like right in that, those highs right there. Break above those on a daily close. If it doesn't just reverse the next day, probably heading on up. CLO. Wow, what a gappy, gnarly chart. Low price stuff, probably heading back to the roadmap line. Kava. I don't know. That's I don't have enough candles to do anything. That is just kind of a choppy hot mess. Probably coming right back down in this zone would be my, if I had to make a guess, that would be what I would expect. Coin is in this box and probably going to dip down and touch the roadmap line. ALL, Allstate. Not doing what Progressive's doing, just kind of churning underneath the roadmap line. That's kind of bearish compared to Progressive. Like I said, it's a picker's market here. You know, say, oh, insurance is a great place to be. Well, Progressive is looking better than Allstate. Allstate looking bearish and can go lower. I mean, it's been kind of weak and then just jumped down to a different level, consolidating under where it consolidated before. H&R block. That's interesting. Nice pop for this time of year. Probably gonna find some resistance right up in that area. See how we kind of consolidate right here, kind of back and forth on it right there. Failed to go higher, extended lower. Now we'll come back and retest that zone around 39, highly likely. Another dollar pop, and then probably retrace once more. Be classic if we found resistance there, retested the roadmap line, broke out like that. Could come up to that, yeah. Then that would potentially be like head and shoulders. So watch that one for a potential, because that could be a really nice potential. Taking it to a new high there than we had back here. Set me an alert. SPGC, ugh, there's no data, no candles, forget that. COHR, ouch. Back to the roadmap line and broke down. Watch for it to hold the lows. If it doesn't, may extend lower. Support would be down at 17. VFS, ridiculous. Highly likely this comes right back down at some point out here in the next couple months. Tesla pushing on down. We were in the 220s. I saw it pre-market. Almost touching the roadmap line. For those that were doubting, there we are. We're in the vicinity. I'd like to see it flush on down to this 215, 220 area, but we can bottom. We're in the vicinity of where we can bottom here and turn up again on Tesla. Extremely positive. You know, other ones that I'm watching for that same situation, Apple, I'd like to see it touch, and Microsoft, I'd like to see it touch. If those three can bottom out, we can turn this baby around. So, TSEM also pushing down, breaking out of the trend, and how low can she go? She can go way on down. Retest of the $27 area probably would make sense. Agilent technology. I don't know. That's bearish. Call of the bear. 109 would be the downside target. Baidu. Looks like we're going to flush it back down to the orange box. Breaking, just obliterating this head and shoulders potential. Maybe setting up another one. We'll see. That one probably no good. This one potential. Except the neckline's all goofy. Yeah. No real potential there either. Probably not going to work. That one's doing something else. China looking kind of weak and nasty. And we may see a lower low on Baidu. PDD coming back to the roadmap line. Breaks down below that. We could see an extension down to 54. It's been kind of volatile. FRHC breaking down below the roadmap line. We may be on a path to get down to this area of support right down in here. Might be where we're heading. All right, that's it for the list for today for what was moving pre-market. ES bias for the day. Let's talk about it a little bit. ES S&P 500. kind of expecting this to rally, which we're already seeing a little bit of rally. Like I said, I expect it to kind of hold that trend line, rally back. We could be setting up for the 100-point rally. We got into the vicinity. This was close enough for me. We got into the consolidation area. We don't have to actually touch down all the way. Like, that was pretty dang close. We were within 8 points yesterday. We can rally now, and that target's up there around 45.30, 45.40. Then we could go down one more time. So I got to watch this move. If this move is a 3-wave type thing, if it moves up, retrace up, watch out. If it gets more bullish, more impulsive is what they call it in Elliott wave speak, then we could see it break on out and go higher from here. So keep coming back for more. I'll update you again tomorrow morning with what we've got. So, and if you want to talk to me all day, get other trades, other advice, not advice, but other charts, other requests, other chat with me, the link is in the description. Market roadmap's like $5. Come hang out in Discord. Otherwise, I'll see you tomorrow. Thanks for coming, everybody. Smash that like button and make sure you subscribe, hit the bell with the notifications so you know when I go live tomorrow and give you another morning monster update.